So welcome everyone. Can you see my screen? Are you able to see my screen?
Yeah.
Great, thank you. Thank you. Um, so if by some chance you cannot see my screen, I have had a habit of causing problems like that. Please just pipe in right away because I don't want to affect you at all. But welcome, guys. This is our first class for managerial accounting. Actually, it's the first time I have taught managerial accounting here at Anoka Ramsey. Taught it numerous times with a bunch of other books. Actually, I've used this book many editions ago. But we are going to, first of all, start with an overview of the class. Many of you guys were in my previous class, and so you understand how I do things. But I just want to go through it. So everyone that is here has a really good understanding of expectations and how we're going to handle things. One thing I do ask is if you guys can all keep your speakers muted unless you want to speak. What that does is it just benefits from us hearing background noise with kids and dogs and all of that. This is the classroom. I will make an effort to always post announcements. I attempt to always email you those announcements too, guys. So you will get them in both fashions. I will only email you guys to your Anoka Ramsey email account because that's all I have. Some people will want me to email to other places. I don't have the means to do that. So please make sure you have access to your Anoka Ramsey email. Oftentimes what I do is I forward my Anoka Ramsey to my other email. Fortunately, in my case, I keep it on my phone so I can always tell when someone is attempting to email me. But know that if you do not have your Anoka Ramsey email, you're going to miss out on my communication, and there's nothing I can do about that. You need to fix that, please. Okay, excuse me. One sec. I'll talk later. No. So what I'd like to do is look at the class. I'm assuming everyone is able to see my screen. If you go to materials and you go to the content section, this is the key of where you're going to find things. The welcome to class, the first tab over here on the right, is really helpful. This welcome to class will provide you with the syllabus. We'll provide you with our Zoom link every Wednesday. It will be the same link. And then we'll also provide you with the ability to get into your McGraw-Hill Connect. If you started the class after Monday, you did not have a McGraw-Hill Connect, so I have reset it for you. You will click on that, and then you click here on this Connect in order to access the McGraw-Hill. Everything apart from the midterm and the final will be done through your McGraw-Hill Connect. So what I want to do is go back here real quick for this class, materials, content will get to you to pretty much everything you need. What I would like to do is open up the syllabus so we're real clear on this course. I do show here that I will have office hours between 8 and 10 on, whoops, that's not what I wanted, 8 and 10 on Wednesday mornings, and then 6 to 8 p.m. on Sunday evening. So 8 to 10 a.m. Central. Here's to get into the Zoom meeting, or excuse me, my office hours, and then Sunday night, 6 to 8. The best way to communicate with me is via email. I will respond to you as soon as I can. I tell people 24 hours of receipt. I really try to do a good job at responding as soon as I'm able. This course is the second course of the 2 accounting courses you need for a business degree. And basically, we're looking at accounting for inside an organization. We're going to talk about various concepts of cost, dealing with job order, process costing, cost volume, profit analysis, variable costing, standard costing, activity-based costing, you name it, we're going to go through it. This is transferable to many of the four-year schools you will possibly transfer on to. We will use the D2L Brightspace for this course, which is what I'm in right now. I really try to lay everything out here. If you would like a hardcover book, those of you who can see me, the hardcover book, you can, for $25.75, receive a loose leaf version from the bookstore. This class, I also have the link shown in here, plus it's pasted all over the screen, and I will make sure I continue to send you links. This class will have 14 chapters. You will have 14 reviews, 14 quizzes, and 14 homework assignments. Now, I'm only going to grade. I will drop 3 reviews, I will drop 3 quizzes, and 3 homework assignments. So although we have 14, the 3 lowest will be dropped. Please don't ask me to extend anything because I'm not going to. Those of you who have had me before know I just don't. That's why I give you 3 drops. This semester for reviews, you will also have 3 drops. The reviews can be long. I know it, guys. I really tried to find the best way to make this class successful. And while sometimes it's very frustrating that you have these reviews, they are really very beneficial. Those of you who take the time to do it, it really is beneficial for you. So this is the setup of the class. We will cover 1 chapter per week. The reviews will always be due on Tuesday night, no matter what. The homework and the quiz will always be due on Monday night, no matter what. No changes to that ever. I try to keep it consistent. The midterm will be, I'll show you where it is in class. It's going to be, I believe, right before the spring break, or 2 weeks before the spring break. And it will cover the first 7 chapters. You'll have from Thursday through Monday to finish the midterm. I will have a study guide for you. It is worth 20% of your grade. The final will be covering the last 7 chapters, and that's worth 15% of your grade. There is no extra credit. And again, as I said earlier, there will not be any late assignments ever allowed. Excuse me. Okay. What is most helpful for you is to skim the chapter, complete the review, join this class every Wednesday. It is not going to be mandatory, but I promise you, you will benefit from it. I am going to lock the class after 10:30. So if you are not able to join by 10:30, I'm not allowing anyone else in. We're going to go over the material. And then those of you who make the commitment to be in class, while it is not mandatory, you will benefit. I will be going over the homework, helping you with a lot of the homework. You'll be able to see what the quizzes are about. That will not be recorded. That will not be available for someone else to review. Therefore, that's the incentive for you to be here. If you have special needs, you can go to the disability office and they will notify me and I'm happy to provide you with whatever you need. One thing I will tell you, I give you so much time for your homework and for your quizzes and for your midterm. You shouldn't have a problem, but again, I will do whatever I can to help you. Do your own work. Here's the heads up. Homework, get all the help you want. Work together. I set up a discussion for each chapter. I'll show you. You guys feel free to work together. Quizzes and exams, no. You are welcome to use books, notes, any information you wish, but you have to do your own work. Something new this semester is through McGraw-Hill. Everyone is required to have a camera. It was part of the notes when you signed up for this class. You are required to have a camera. That camera will be accessing you during your taking of quizzes and with the D2L for the exams, the MnState will be accessing your camera. So that is a new standard. Last semester, we didn't have it totally in place. We do have it fully in place this semester. And this is about academic integrity. People still can cheat, but it's definitely going to cut down on other people taking your exams for you. If I catch anyone that is cheating, you will automatically get an F and get kicked out of my class. No questions asked whatsoever. Now, again, that's not for homework, guys. It's for quizzes and exams. Another piece that is very important, non-attendance and reporting policy and procedures. Instructors are required to determine student attendance within the first 2 weeks of a course. The purpose of the non-attendance and reporting policy is to ensure that for student loans, there is presence. Students will automatically be dropped from this course if you meet one of the following. For the first week of class, you must complete either the weekly homework assignment or the chapter quiz in McGraw-Hill Connect. If you do not complete either one of those by Monday night, January 18th at 11:59 p.m., I will drop you from this class with no questions asked, period. Or for the rest of the semester, if a student does not complete an assignment or a quiz, one over a 2-week period, I will automatically drop you from class. Why am I doing this? I'm not trying to be mean. It's just that you're not going to make it in here. If you miss 2 weeks, you're not going to make it in this class. And so I'm better off to drop you and you have a drop on your transcript than an F. Okay, that's why. Can you override me and force that I bring you back in? Yes, that happened once last semester. The guy still got an F in the class. So I'm doing this to honestly make your life easier and to make my life easier, because if you're not taking this class seriously, let's just deal with it right from the front. If a student adds the course past the drop add dates, the student will not receive points for any assignments, quizzes, or exams for which the due date has already occurred. So even I've had people that said, oh, I just enrolled in your class tonight and I can't get the review done. Not sorry, I mean, it's one review. You have 3 drops, per review, so you don't have to worry about that. But I don't extend anything. Are you tired of hearing that? Sorry, guys. Guys, this has a Zoom component. It is encouraged. It is not required. Know that. This is only encouraged for you. Excuse me one second. It's only encouraged for you to attend because I promise you it's going to benefit you. What else? Active military. If you have, okay, I said all that to say, however, if you're in the military and you're on active duty, I will do anything to help you. I will extend things in this case because of your active military position. I will jump hoops for you. Diversity and inclusion, please know, I don't care what your religion is. I don't care what your orientations are. Every single person is treated equal to me. So I don't care who you are, you will be respected and treated the same as any other person. I want you to know that. I'm here to help all of you. And please know, I'm here to help you. I also expect you to help yourself, which means do the work. I'll jump hoops for you when I know you're going out of your way. Sometimes I'll get students they can't figure a homework out and they're freaking out. They want me on Monday night Monday night to help them. Well, they don't attend the Zoom. They're not looking at my lectures. It's I want to be respectful, but I rather put my energy and effort helping those students who have really taken all the other actions I've given, and then I'm happy to help you. The ad drop dates are all right here for refunds or when you can drop out. Then I have for you a list of what we're going to cover each week. Please note a couple things. The midterm is week 8, March 1st through 8th. I'm going to have that midterm available for you from Thursday through Monday, Thursday, Friday, Saturday, Sunday, 5 days. Once you start it, you have to complete it, but it will be available. I'm telling you, you should begin reading chapter 8 that week, but there will be nothing else due but the midterm. Spring break is on week 10. Then I want you to be aware the week 14 from April 12th to 19th, we will not have Zoom. We will not have any class. We will not have any materials we cover. That, to be real honest, is because I'm a CPA and I want to give you my full attention. And that week, I just won't be able to. So guess what? We're just going to take a break. We move on to show we finished chapter 14 the last week on the second to last week, and we will have the final on the last week of class, only Monday through Friday. Some of you who have taken my previous class know that if you have an A going into the final, and I will let you know those who do, you are not required to take the final. I do that because if you've worked your booty off that hard, I'm not going to make you take the final. I'll also tell you, last semester, people that had like an 87.3 and up, I pushed to A's. Why did I do that? Because those students that had an 87.3, I could see were in Zoom all the time. We're completing the reviews and not complaining about the reviews. So no, even though there's no extra credit, I'm not a hard person. I go out of my way to help you succeed. But I'm also going to tell you, if you have a 59 in this class, I'm going to give you an F, because I'm not going to bump you to a D, because a 59 means you need to take the class again. Does that make sense, guys? I really do try to be fair. And And I also am real honest with you to tell you it's a tough class. Okay. As I go back to content, you see down here, week one. Week one, where you're going to find information. I don't have any lectures yet because this is my first class, but I will provide this lecture when I am done today. I will materials. I've got the PowerPoint up here right now, but I will probably provide you with some additional materials. And then as you see for links, here's the link to the class. That is not noon to 2. That is, sorry, I'll make sure I get that fixed. But the one piece I want you to be aware of is this chapter 1. Use this discussion if you have any questions. So you go and you click on chapter 1 and anything to do with the homework, again, not quizzes, but the homework. If you have a question or you have a question on a concept, you can start a thread, ask your question, and you work together with each other. I'll check these. Stuart, the accounting tutor, will check this also. Know that if you've got a specific question about homework, you might want to copy and paste your page so people can see what you're talking about and be real clear so people can help you. Stuart Rowe is the accounting tutor. There's a section in the syllabus, and we will also put an announcement up how you can make appointments with him. He's very helpful. Any questions before I start with chapter 1? Come on, somebody has a question, don't you?
I have a question.
Yes.
When you say you can use notes and books on the quizzes,
I can't hear you.
Can't hear me?
Can you talk louder?
Can you hear me right now?
Yes, I can.
Okay, my bad.
Sorry.
When you said we can use any material on the quizzes and midterms, do you mean like we can have like split screen up and have the book on one side of the screen?
I believe you should be able to. That's fine
Okay.
with me to have your book up.
Without getting flagged for cheating?
No, that's not, Jimmy. Okay, cheating is having someone else do your quiz. Having your book up is to me not cheating. I am
Okay.
telling you, you have access to, you can have all your homework sitting on pieces of paper. You can have your book open. You can have all your answers to the work you've done. That's not cheating to me.
Okay.
Cheating is having someone else do your homework, or not homework, do your quiz.
And then I got a question. You hear me?
Yes.
Okay, so you said it's gonna be like a Zoom for the exams and quizzes?
No, no. I'm sorry if I said that. I didn't mean that. It's not a Zoom for the exam and quizzes at all. You will do them on your own. The quizzes in McGraw-Hill, the exams will be in D2L. But what's different is we're using something called Proctorio. So when you do your quizzes, your camera's going to be active and you will be recorded while you're doing your quizzes.
Is that like recording us or recording the computer or both or?
It's recording you. Are you the right person taking the quiz?
Oh, okay.
Yeah. No Zoom, nothing like that. It's just, you can't help when things are online. There's cheating. It's just reality. But what we're trying to do is limit it. Limiting it by when you're taking that quiz, I will be able to go back and look and see you are the same person who's taken the quiz over and over again.
Makes sense.
Okay, that's it. People had issues thinking it was a privacy matter, and it took a semester for us to get it legal, ready to do. I don't understand how all the privacy issues work, but I guess Min State has it set up now where we can't be in trouble for the students' privacy, because since this is online, we have a right to see who's taking the quiz. Okay?
Nancy, I have a question. Can you hear me?
Yes, I can.
Okay. Are you going to have the videos going over like all the topics in the book again, or is it just going to be these Zoom meeting videos?
The Zoom meetings will be recorded. Here's my deal, and I'm sorry, guys. I've been gone for 2 months, and we just got home at 6 a.m. this morning because my husband's not feeling well, so I'm getting him into the doctor today at 2. But this is my first time teaching this managerial accounting at Anoka Ramsey using this book. So I have not yet created all those lectures. If I get very engaged and get on it, I'll do it. Now, I'm working on the PowerPoints. Just each PowerPoint probably takes me 3 hours to do. I know it sounds so silly, but they're just time consuming because I don't use what the textbook does. I create my own. So that's where I've spent my time. I will record these lectures. And if, like I said, if I get active and start working on chapter 2, I'll let you guys know, and I'll text you. But as of right now, I'm sorry I don't have that benefit for you. Yes. Any other questions? That's what I'm here for. No question, guys, no question is too stupid, just the ones you don't ask. Are quizzes multiple choice? No, they are not multiple choice. The quizzes are truly fill in the blank. I am considering having your midterm and final multiple choice just because I have to create those. But as of, and guys, if you stay with me through this class, you will get to actually see the quiz. So there will be no secrets, okay? You'll get to see exactly what the quiz is about. Okay? How's everyone doing?
Good.
Any other questions? Okay. So guys, what I'd like to do is I am going to start with chapter 1. Now, we're going to go through the PowerPoint that I have for you. And then what we're going to do is open. Oh, there it goes. We will go through it, and then I've embedded in here a bunch of questions and problems, but then we will also go through the homework because I don't want you to have any surprises. And then we will go through what kind of questions are on the quiz so you have no surprises. Okay. So guys, this course involves what's called managerial accounting. You already had financial accounting. Financial accounting is where we talked about the here, I'm gonna stop my video here. Can you still see my screen?
Yes.
Thanks. So financial accounting you had previously, where the accounting was focused on providing information to external users so they could make decisions about the company. This course is totally different. Managerial accounting is focused on providing very detailed information to people within a company. So this is more involved with providing information to those within a company that make decisions. So managers can help formulate what they're going to produce, how they're going to operate, or when certain products are going to be produced. Managerial accounting. I live in Red Wing. Red Wing Shoes is huge here in Red Wing. They definitely use various aspects of managerial accounting. Many of their heritage booths are totally produced here. So what production lines are going to occur during what part of the month, the volume they're going to make, making sure they have the materials ahead of time. All of that involves managerial accounting. So we are going to talk about cost classification, which is assigning costs to what we're going to call cost objects. So this is accounting for the costs that happen in manufacturing companies. We are going to learn how to prepare financial statements for those managers. And then we're going to talk about if certain things change, what's going to happen with various costs in relationship to changing certain activities or behaviors. All of this is ultimately used to help make decisions, just like financial accounting is used to ultimately help make decisions. So the first objective is to understand what are direct costs and what are indirect costs. Direct costs for products are costs that can be easily and conveniently traced to a unit of product or other cost object. Mainly, they're going to be direct materials and direct labor. Shoes, Red Wing Heritage boots. I love them. I'm also kind of lucky because if you know someone who works at Red Wing Shoe, you get them for half off. So that's the only reason I can afford them. What are the direct materials? It's the leather. It's the ties. It's the fasteners to make the, I'm not going to be very accurate and I'm so sorry, but the holes to punch the holes for the lace to go through. It's the wood for the heel. It's the cushioning. Do you guys get what I'm trying to say? Those direct materials directly make up that shoe. And the direct labor are those individuals on that assembly line actually working on that shoe. What are indirect? So direct costs are direct materials and direct labor. But guys, there's a lot more involved. There's a lot of indirect costs. Those are costs that cannot be easily and conveniently traced to a unit of product or other cost object. What does this mean? We have something we call manufacturing overhead. It's everything else. It's the warehouse or the assembly building this is all taking place in. It's the utilities to heat the building, the water so you can drink. It's the cafeteria where employees can get food. It's the supervisor who's sitting on his desk watching you over cameras. You get my point. I'm being a little sarcastic, but do you get the point? It's all the stuff. It's the grease to grease the machines that are carrying the shoes down the passageway, the trolley. These indirect costs are incurred to support a bunch of different cost objects, but they can't really be traced to a particular product. Okay? Oh, come on, where is it? So, what did we learn there? What are direct costs and what are indirect costs? Now, we are going to talk about the three basic manufacturing cost categories. Guys, we already did it. Direct materials, direct labor, and then this big bucket that a lot goes into called manufacturing overhead. Direct materials are raw materials that become an integral part of the product and that can be conveniently traced to it. This example, a radio installed in an automobile. Direct labor costs are those labor costs that can be easily traced to individual products, such as the wages paid for the automobile assembly. Like this guy is installing the radio. Do you see how he is directly working on this automobile? Make sense? Then the other big bucket, which guys, it's a big bucket, manufacturing overhead. It includes all the manufacturing costs except direct material and direct labor. These costs cannot be readily traced to finished products. The nice supervisor with his feet up on his desk looking at you through a camera, you know, it's a cost. They got to pay his salary, but is he really directly involved with those materials? No. Or what about the lights to help you see? It's not necessarily directly involved with the products. So the direct materials that cannot be easily or conveniently traced to a product, or the indirect labor costs that cannot be easily or conveniently traced to a specific unit or product. Think about a custodian, guys. You need them, but they're not really directly related to the product. So examples of manufacturing overhead may be depreciation of some equipment, utility costs, property taxes on the building, insurance premiums. Only those indirect costs associated with operating the factory are included in manufacturing overhead. So we know what direct materials are, we know what direct labor is, and we know what manufacturing overhead is. Remember, we initially talked about direct materials and direct cost and indirect costs, and how direct costs are direct material and direct labor. Indirect costs are manufacturing overhead. Now what we're doing, guys, is we're just learning terms. Don't let it confuse you. We're just learning terms. Now we're going to talk about what are prime costs and what are conversion costs. Prime cost will be direct materials and direct labor. Conversion costs are direct labor and manufacturing overhead. Now, we're talking about all this manufacturing because the way it plays out in the financial statements, you're going to understand in a little bit. And when we're dealing with costs directly associated with manufacturing, they're going to go in a specific spot in the balance sheet and also as far as assets go, and also the income statement. But there are costs in companies that are not manufacturing costs. Selling and admin costs, we will never lump into manufacturing costs, guys. Costs that are necessary to secure an order and to deliver products are not manufacturing costs. They will always be selling costs. They're going to go directly into the income statement as a selling cost. Administrative costs are those executive, organizational, clerical costs. Those are people who are sitting in the administrative building doing the accounting or deciding the big plans for a company. Now, the supervisor in plant is a little different. That would be part of a manufacturing cost. But the administrative costs, those people who are doing the payroll, those head honchos that are the execs of the company, those are not manufacturing costs. Those are considered administrative costs that go right into the income statement on their own. So what we're going to do now, and this is how I'm going to kind of conduct this class, is we'll go over exercises to help you gather what we're saying. So I'm not just going to give you a bunch of information. We're going to also talk about it. So this is exercise 1-2 in your book. The PC Works assembles custom computers from components supplied by various manufacturers. The company is very small, and its assembly shop and retail sales store are housed in a single facility in Redmond, Washington Industrial Park. Listed on the next slide are some of the costs that the company incurs. For each cost, indicate whether it would be most likely classified as direct materials, direct labor, manufacturing overhead, selling, or an administrative cost. So guys, I want you to take a moment and I want you to look at these. And I want you to think in your mind, how would you lump it? And then I'm going to give you about 2 minutes and then I'm going to go through them all. But what I'm trying to do here is allow you to see if you're grasping the information. I'm not going to call on anyone. We're just going to go over this. Just take a moment and look at this, okay? Am I going to bug you if I go now? Okay, so we'll start here. So for the first one, the cost of a hard drive installed in a computer. Your options are direct materials. Well, that's definitely it, isn't it? It's definitely direct materials. Does that make sense? Guys, if I go through this and you have any questions, will you stop and just yell and just say, hey, I don't get it. Explain. Next, the cost of advertising in the Puget Sound computer user newspaper. Isn't that a way to try to sell the products? Advertising? It's not a part of manufacturing. Next, the wages of employees who assemble computers from components. Bakura, are you there? Can I pick on you?
Yes, I'm here.
Okay, what is this one?
Direct labor.
How many agree? You go, girl. I wouldn't have called on you if I didn't think you could have handled it. It's directly involved with making this product, guys. Direct labor. Okay, next. Sales commissions paid to the company's salespeople. Guys, it's selling. The salary of the assembly shop's supervisor, he's not directly involved, but it's manufacturing overhead, okay? Then the salary of the company's accountant, it's the administrative costs. And then depreciation on equipment used to test assembled computers before releasing to customers, it's manufacturing overhead. Rent on the facility in the industrial park. This might be a combination. Oh, it is. It's a combination of manufacturing overhead because that's going to be the portion that manufactures the products, and probably the selling department's going to have a piece of that to allocate for them, and the administrative offices also. Now, guys, I told you I wouldn't let anyone in after 10:30, but Sarah clearly emailed me prior to class to tell me she had an emergency. So that's why I'm letting her in. I'm not hard and ridiculous. Sarah, I'm just letting them know why I allowed you in after 10:30, sweetie. Okay. Okay. So this is a variety. So as you see here, if any of these don't make sense to you, yell at me, ask, because this is how we learn, is to kind of like churn one another and ask questions. That's also why I want you to use the discussion board. Not only ask the questions, but be there, with your other students to help answer questions, because it also benefits you.
Hello, Nancy.
Yes.
Yeah, I have a question. So you mentioned that the selling costs and administrative costs can be direct costs and indirect costs. I want to know why.
Okay. Remember, selling costs are not are not related to making products. Okay. But selling costs can be direct costs, meaning they can be a particular advertisement that says we're selling these goods. Or they can be generic, like the paper clips that are utilized with the selling department for, for those employees. Or they may be the electricity just for the selling department. So the point being, there are always direct costs and indirect costs. There are direct costs and indirect costs with making products. But with the administrative department or the selling department, some concepts are real easy to understand, like the direct cost. If I'm doing the payroll, then I'm clearly a direct cost in the accounting department. Or if the whole building is 20,000 square feet and the accounting department takes up 1,000 square feet, they can assign that percentage of the office building's utilities to the accounting department. That's more indirect. Does that make sense?
Yes.
Thank you for asking, June, because if you're asking, everyone's going to have those questions. So thank you for asking.
Yeah, thank you. Yeah.
So this third objective is to understand cost classifications used to prepare financial statements. We're going to learn what the difference is in product costs versus period costs. Product costs include the costs that are involved in acquiring or making a product. Product costs attach to a unit of product as it's purchased or manufactured. And they stay attached to that unit of product as long as it remains in inventory awaiting to be sold. So for manufacturing companies, product costs include the raw materials, which are the materials that actually go into that product, such as for an automobile, metal, radios, leather, cushions, engines. Get what I'm saying? Work in process consists of units of product that are only partially complete and will require further work before they're ready for sale to the customer. What does that mean? Well, for an automobile is still on the assembly line that has its radio in it, the engine in it, but the seats aren't in it yet, or the carpeting isn't in it yet. That's a car that's in process of work. It's work in process. It still has more that needs to happen to it before we can sell it. Finished goods consist of completed units of products that have not yet been sold to customers. What would that be? Those would be boots that have been finished, that have been boxed, that are sitting on the shelves ready to be sold, but they haven't been sold yet. Or they may be automobiles that have been inspected, that are out ready to be shipped. Make sense?
Yes.
When direct materials are used in production, their costs are transferred from an account we call raw materials into an account we call work in process. So what happens is when we go and buy a bunch of leather, or we go and buy a bunch of radios for a car, we initially purchase those products, and the journal entry to record that will be directly into raw materials, and we would credit our accounts payable. When we then grab that leather to start using it, or we grab those 10 radios because we have 10 we need to install in the cars on the assembly line, we transfer those materials out of raw materials and we put it into work in process because we are now using those materials in manufacturing our products. Direct labor and manufacturing overhead costs get added to work in process to convert direct materials into finished goods. Once the units of product are finished, their costs get transferred from that account we call work in process to another account called finished goods. And then finally, when the manufacturer sells its finished goods to customers, we transfer those costs from the account finished goods to now an account on the income statement called cost of goods sold. So here's how it looks. Product costs, the direct materials, the direct labor, and the manufacturing overhead are an asset sitting in inventory. But once we sell them, that gets transferred to the income statement. Period costs, which are selling and administrative costs, are always put on the income statement as an expense immediately. But the product costs do not get put on the income statement until they're sold. So that means when we go and purchase raw material, until we actually use it, it's an asset called inventory. So guys, which of the following costs would be considered a period rather than a product cost in a manufacturing company? Manufacturing equipment depreciation, property taxes on corporate headquarters, direct material costs, electrical costs to light the production facility, or sales commissions. What do you guys think? Well, A is going to be manufacturing overhead, so it's a product cost. B, property taxes on corporate headquarters would be a period cost. Direct materials we know is a product cost. Electrical cost to light the production facility would be a product cost. And sales commissions, remember, that would be a period cost because anything related to sales and administrative would be period costs, which means they get expensed on the income statement right away. Suppose you'd been given a summer job as an intern at Isaac Aircams, a company that manufactures sophisticated spy cameras for remote controlled military reconnaissance. The company, which is privately owned, has approached a bank for a loan to help finance its growth. The bank requires financial statements before approving the loan. Classify each cost listed on the next slides as either a product cost or a period cost for the purpose of preparing financial statements. So guys, the depreciation on salespeople's car, on the salesperson's car, what is it?
Product cost.
Sales.
Period cost.
Period cost. Rent on equipment used in a factory. What happens in factories? They make products, right? Does this make sense? Lubricants used for machine maintenance.
Product cost.
Awesome. Salaries of personnel who work in the finished goods warehouse.
Period.
Is it sales or admin?
Product.
Product. Wait. That doesn't sound right. Salaries of personnel who work in the finished goods warehouse. I think I'm wrong, guys. Oh my God, I think I screwed up. I think that should be product, but it's saying period. I will let you know. I might have screwed up. To me, because it's in the finished goods warehouse, unless they're saying the goods are already done, so there's no more, you know what they're saying, guys? They're saying that's a selling expense. I think that's what they're saying. Because now it's finished goods, they're trying to sell it. And that's why it's a period cost. I'm sorry, I had to think. So what's happening here is the goods are done, they're finished. The people that are in the finished goods warehouse are trying to sell the goods. So that's why it's a period cost, and I'm sorry. Next, soap and paper towels used in a factory worker at the end of the shift. Product. Factory supervisor salaries.
Period.
Product. Heat, water, and power consumed in the factory.
Period.
In the factory.
Product.
Materials used for boxing products for shipment overseas. This is going to be selling, so they're period. They're selling it, okay? Got it? Advertising costs are part of selling, so they're period costs, right?
Mhm.
Workers' comp insurance for factory employees. Product. Remember what's happening in the factory, right? Okay, next. Depreciation on chairs and tables in the factory lunchroom. Product. The wages of the receptionist in the administrative offices. What is admin and selling? Period cost.
Period.
Cost of leasing the corporate jet used by the company's execs. Period costs. Selling and admin. The cost of renting rooms at a Florida resort for the annual sales conference.
Period.
Cost of packaging the company's product.
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 Product costs. Now, the last thing we're going to do, someone needs to turn off their microphone or mute yourself. Understand cost classifications used to predict cost behavior. We now have 3 types of costs we're going to talk about. One's called variable, one's called fixed, and one is called mixed. Cost behavior refers to how a cost will react to changes in the level of activity. So a cost that varies in total in direct proportion to changes in the level of activity are going to be a variable cost per unit is constant. So for example, a cost that varies in total in direct proportion to changes in levels of activity. So we have to look at what causes the incurrence of a variable cost. Could it be units produced, which is what we would call the cost driver? Is it machine hours? Is it labor hours, or is it miles driven? You see, a fixed cost that remains constant regardless of changes in the level of activity. That's a fixed cost. If expressed on a per unit basis, the average fixed cost per unit varies inversely with changes in activity. So if we think of a fixed cost, we would basically think of the insurance on the building. That's a fixed cost. It doesn't matter how many products are being produced. Our insurance is going to cost the same if we produce 20 units or 200 units. Right? That's a fixed cost. There are types of fixed costs. There are committed costs that are fixed, and there are discretionary costs that are fixed. The committed cost can't be significantly reduced in the short term. They're long-term fixed costs. But there are some discretionary fixed costs that can be altered in the short term because managers make certain decisions. So as you see here, I'm just going to bring this down. A straight line closely approximates a curvilinear variable cost line within what we call a relevant range. So basically, when we're dealing with, when we're dealing with an activity, and we're dealing over here with costs, for the most part, as an activity increases, the cost at some level, this would be variable, it's going to increase. But fixed costs oftentimes are going to stay constant no matter what the activity is. Okay? The relevant range of activity pertains to fixed costs as well as variable costs. So for example, if we assume office space is available at a rental rate of 30,000 per year in increments of 1,000 square feet. So fixed costs would increase in a step fashion at a range of 30,000 for each additional 1,000 square feet we may add. But it's 1,000 square feet is where our fixed cost remains. If we need to bump it up to 2,000 square feet, then our fixed cost relative to these 2,000 square feet jump. The relevant range of activity for a fixed cost is the range of activity over which the graph of the cost stays flat, meaning rent cost of 30,000 is fixed for 1,000 square feet. But then if we need 2,000 square feet, our fixed costs jump to 60,000 dollars. So it's remaining fixed for this 2,000 square feet. But if we need 3,000 square feet, we're going to jump up to 90,000. This is the relevant range of a fixed cost. So it doesn't mean we pay 30,000 no matter how many square feet we have. We pay 30,000 for 1,000 square feet. But if we need to bump up our square footage, we're going to have to pay more. So behavior of cost within the relevant range, a variable cost in total variable costs increase and decrease in proportion to changes in the activity level. But the variable cost per each unit is going to remain constant. However, when we're dealing with fixed costs, the total fixed cost is not affected by changes in the activity level within a relevant range. But what happens is per unit, our fixed cost per unit is going to decrease as we increase our activity levels. Because what happens is if a cost is fixed, the more we produce per unit, that fixed cost is going to decrease. Which of the following costs would be variable with respect to the number of ice cream cones sold at a Baskin Robbins? The cost of lighting the store? You think that's variable? The wages of the store manager? How about the cost of the ice cream and the cost of napkins? Wouldn't we have to spend more money in ice cream if we sold more ice cream cones? Wouldn't we have more napkins we need when we sell more ice cream cones?
Yes.
So what we're going to now look at is we're going to look at this and decide, we're going to classify these costs here as variable, fixed, direct, or indirect. Consider the object, the cost object we're dealing with is a flight. And flight attendants and pilots are paid based on hours of flight time. But here's the deal. Pilots and flight attendants aren't paid more if the plane's full. Are they? No. So if the plane has 10 passengers, like has happened in the past year, or the plane has 300 passengers, you know, you might need a couple more flight attendants in that case, but the flight attendant or the pilot isn't going to get paid more. But let's look at these costs. Is advertising a fixed cost or variable cost? Is it direct or indirect? Do you see here that advertising is a fixed cost? It's not based on the number of passengers. Advertising is a fixed cost. What about beverages served on airplanes? What do you think of that?
Variable cost.
It's a variable cost and it's a direct cost, isn't it? You know, these beverages were served on this airplane, this flight. What about the regional VP salary? Isn't that a fixed cost? But it's indirectly related to that flight, isn't it? And then depreciation on ground equipment, that's a fixed cost, but that ground equipment isn't related specifically to this flight alone. So that's an indirect cost.
I have a question.
Mhm.
Why the regional VP salary is indirect cost?
Because the regional vice president has a fixed amount for his salary. But as it relates to that flight, that particular one flight, let's just pretend Delta. So that regional vice president's salary related to that flight for Delta is not directly related to that Delta flight from Minneapolis to Atlanta. The regional VP salary oversees, kind of like a supervisor, the whole operation. So he is helping out with this flight he might be helping out on all kinds of different projects, but his salary isn't directly related to that flight in the air. Those pilots would be directly related to that flight in the air, but not a regional supervisor. Does that make sense?
Oh, yes. Yeah, I got what you mean.
Got it. And guys, that's why I really appreciate when you ask questions, because sometimes I might not be saying it real clear. And so you need to ask me something so I can further clarify what I'm trying to say to you. Okay.
I have a
Fuel
question.
yes.
For a fixed cost, like rent on square footage of a warehouse,
Mhm.
what if, like, say, for example, you rented the 3,000 square feet, but you got a discount with each additional rental, like on 2,000 square feet, you got $5,000 off, or 3,000 square feet, you got $10,000 off. Would that still be fixed?
It still is fixed because, you know, within a relevant range, it's still fixed. You know, you still know this is what you're going to pay for this amount.
Okay, thank you.
Yeah, what you're asking is interesting. It's not based on an extra square foot. You're getting a little more. It's still within a relevant range, a fixed price. However, they determine that price. So fuel used in planes. It is a direct cost to that flight, isn't it? But the fuel is going to be based on how far they're traveling. So fuel's variable, and you know, even not even just how far they're traveling, how the winds are, what the temperature is, how heavy the airplane is, you know. So it's a variable cost that's going to change, but it's directly related to that flight. Do you see how you can pin it directly on that flight? Okay. So as you see here, both the pilots and flight attendant wages are going to alter. I mean, in themselves, you generally have, well, certain airplanes have 2 pilots, certain airplanes have 3 pilots. The flight attendant's wages, if there are more people on a flight, they're going to have more flight attendants, which makes it variable, but it's directly related to that flight. So they can peg these 3 pilots flew this flight. The variable cost is going to be determined on how many people they need to house or to satisfy that flight, but they can directly be assessed to that particular flight number. Now, the aircraft maintenance salary can be a fixed amount, but it's not directly related to that flight. So that's why it's an indirect cost, even though it's a fixed amount. Now, we've got something we call mixed costs, which can contain a combination of a variable and of a fixed element. Consider utility costs. Okay, so for utility cost, there's usually a fixed monthly utility charge that you're going to pay no matter what you use. And then you're going to have a cost per kilowatt hour or kilowatt. So in that case, you're going to have a combination. The mixed cost, which we call Y, is a combination of a fixed cost plus a variable cost times a level of activity. So there can be costs that are mixed with a component of fixed and a component of variable. If your fixed monthly utility charge is $40 and your variable cost is 3 cents per kilowatt hour, and you use 2,000 kilowatt hours this month, you're going to have a combination of the $40 plus the $60 for your kilowatts. So it's a bit of a fixed plus a variable cost. How you guys doing?
Good.
Okay. Now, next, Northeast Hospital's radiology department is considering replacing an old, inefficient X-ray machine with a state-of-the-art digital X-ray machine. The new machine would provide higher quality X-rays in less time and at a lower cost per X-ray. It would also require less power and could use a color laser printer to produce easily readable X-ray images. Instead of investing the funds in the new X-ray machine, the laboratory department is lobbying the hospital's management to buy a new DNA analyzer. So for each of the items, indicate by placing an X in the appropriate column whether it should be considered a differential cost, a sunk cost, an opportunity cost in the decision to replace the old X-ray. You know, we haven't even talked about this yet. So let me go and see where, let's talk about these, then we can come back to this. Okay, let me. We didn't really have anything in here, and they're just,
It's on slide 113 through 115 or 116.
here we are. So let's talk about these costs, then we can go back and fix that, okay? So I got a little ahead of myself. I'll fix that. So let's talk about some costs that come into play when we're dealing with making decisions. Decisions involve choosing between alternatives or options. The goal of making decisions is to identify those costs that are either relevant or irrelevant to a decision. To make decisions, it's important to have a grasp on the concepts of differential cost and revenues, opportunity cost, and then sunk costs. So differential costs are the difference in cost between any two options. A difference in revenue between two alternatives is called a differential revenue. Both are always relevant to the decision. These differential costs can be fixed or they can be variable. So it's the difference in revenue between the two alternatives is the differential revenue, and the differential costs are the difference in cost between those two options. An opportunity cost is the potential benefit that's given up when you choose one alternative over another. These costs are not usually found in accounting, but you got to think about it. So what is your opportunity cost you incur by attending class? You're not doing other things, are you?
Mhm.
Sunk costs have already happened, have already been incurred, and are done with. They can't be changed now, and they can't be changed in the future. They're irrelevant costs that are done. You can't, you know, you can look at them and go, boy, that was a bad deal, but they're just going to be ignored when you make decisions. In business decision making, a sunk cost is a cost that's already been incurred and it can't be recovered. Sunk costs are sometimes contrasted with prospective costs or future costs that can be incurred or changed when actions are taken. So suppose you're trying to decide whether to drive or take a train to Portland to attend a concert. You have ample cash to do either, but you don't want to waste money needlessly. So is the cost of the train ticket relevant in this decision making? Should the cost of the train ticket affect the decision of whether you drive or take the train to Portland? What do you guys think? Is it relevant or not? I think it would matter, wouldn't it?
Yeah, your memory's familiar.
How about you're trying to decide whether to drive or take the train to Portland? You have ample cash, but you don't want to waste money. Is the annual cost of licensing your car relevant in this decision? No. Why isn't it relevant? It's going to happen no matter what. If you take the train or you drive, the licensing cost is irrelevant. It's going to, you have to have that cost no matter whatever decision you make of taking the train or not. Suppose your car could be sold now for $5,000. Is this a sunk cost? Knowing that a sunk cost is something that's already happened?
No.
No. So let's go back and do this one that I screwed up on. So determine with these various costs if we're dealing with a differential cost, a sunk cost, an opportunity cost. So the cost of the old X-ray machine has already happened, right?
Mhm.
The salary of the head of the radiology department, excuse me, let me, I think I screwed this up how I did this. Sorry guys, you're having to deal with me. Okay, the salary of the radiology department, I don't think is anything really. It doesn't affect you, or the salary of the head of the laboratory department really isn't any of these. But the cost of the new color laser printer is a differential cost if you choose one over the other. The cost of maintaining the old machine would be a differential cost. Or the cost of the electricity to run an X-ray machine would be a differential cost. The benefits from a new DNA analyzer, remember they said they could get a new machine or they had the thoughts of a new DNA analyzer. That would be an opportunity cost. What is the cost if you did another alternative? But no, the salary of the radiology department or of the laboratory department, really none of that plays into whatever decision they make. The cost of the salaries of the head of radiology or lab and the rent on the space are neither differential costs nor opportunity cost or sunk costs. These costs do not differ between the alternatives and therefore are irrelevant in the decision. And they're not sunk costs because they're still going to occur. Sunk costs have already happened. Okay. Last one thing we have to talk about, then we'll get on the others. Prepare income statements for a merchandising company using the traditional and contribution formats. So a merchandising company, we know, does not manufacture their goods. They purchase those goods already completed. In the traditional format, we put everything into cost of goods sold. This is mainly used to prepare information to external users. The contribution format is a new type of income statement we are now looking at that's used by management to see what costs are variable and what costs are fixed that we cannot control. The key here is that our sales minus those variable expenses give us what we call the contribution margin to help take care of our fixed expenses. This contribution format is going to be very helpful in understanding what do we need to sell in order to break even. We don't want to just break even. We want to make money, don't we? The contribution income statement format is used as an internal planning and decision tool. And we're going to look at these various different chapters to see how it's going to benefit us, mainly knowing what is it we need to produce in order to make a profit. So, problem 121, Marwick's Piano purchases pianos from a large manufacturer for an average cost of $2,450 per unit. And then sells them to customers for an average of $3,125. The company's selling and administrative costs for a typical month are shown here. So during August, Marwick's Pianos sold and delivered 40 pianos. We are going to prepare a traditional format income statement, and then we're going to prepare a contribution format income statement. So what we're going to look at is how to compare each type. The traditional format is going to take our 40 pianos times the selling price per piano to come up with our total sales. We then know our cost is $2,450 per piano times 40 pianos is our cost of goods sold. The difference is our gross margin. Then we can take our selling expenses, you see, our advertising, our sales commissions, our delivery of the pianos, our utilities and depreciation to come up with our selling expenses. We come up with our administrative expenses to ultimately come up with our net operating income. However, with the contribution format, we're going to end up with the same net operating income. But what we're going to do is we're going to show the variable expenses first to come up with our contribution margin, and then show all of our fixed expenses below. So as you see here, our sale of pianos, and then our cost of goods sold, you see we technically are only making $375 profit per piano if we look at just the variable expenses. So what the contribution margin is doing is showing the variable cost above and the fixed cost below. So in this case, our contribution margin is $15,000 to help offset our fixed expenses. Because the fixed are in place no matter what. Fixed costs remain constant in total, but vary on a per unit basis, inversely with changes. As the activity level increases, the fixed costs will decrease on a per unit basis. Showing fixed cost on a per unit basis on the income statement might mislead management into thinking that the fixed costs behave in the same way as the variable costs. Management could be misled into thinking that the per unit fixed costs would be the same regardless of how many pianos were sold during the month. Because of this, fixed costs generally are shown only in totals on a contribution format income statement. So guys, there you have it. I am going to end this recording, but hang in there with me because I will then show you some more information.